Things are unraveling very fast, and I'm going to explain the financial circumstances behind all of this. You came here for the truth, so let me unveil that for you. Obviously, big news going on right now. I got to tiptoe around it so that I can actually keep it monetized. What we need to know here is not the daily events that by the time you watch this video are probably already irrelevant. What we're talking about here is the impact on oil, the markets, energy, what's happening right here down to the details that you must know to, make a judgment call around this. The oil price at this time, at the time of this recording, while the markets are closed, they are still, in the case of WTI, at about $85. You got Brent at about $90. What was explained here prior to the situation that happened was that, look, this is getting a little testy and the prices escalated. As you see there, there's green, because of turbulence, because of what they thought could happen. Of course, it did happen, and now it could go back the other way. As a result of this, we could see dramatically higher prices. What is going to happen in the Strait of Hormuz? That's another question that could, in fact, create another increase. The market is closed as of this recording. By the time you're watching this video, it should still be closed, but within hours, it will be open. Let's see what happens in that regard. Of course, oil being very, very sensitive. Now, at the same time, we're seeing the United States producing so much oil. In fact, it could be self-sufficient if it wanted to, but what does it do? Of course, it sells it off. So that you got to understand, it's not like, hey, we're self-sufficient. It doesn't work like that because so much of it actually gets sold off. Where it comes from, well, then, of course, you got to look at that and understand, hey, this stuff has to come through these very sensitive areas, and now there's yet another one. The Red Sea was a problem. Strait of Hormuz becoming a problem. Add it to the list. You've got issues going on in different areas, even the Panama Canal. We can't have things traveling, free-flowing goods suddenly becoming more restrictive. That is always going to mean higher prices for you. As an investor, you might be able to take advantage of that, but at the same time, you got to watch this as it relates to inflation. We've already been dealing with a lot of inflation. Let's see what happens. We've got election 2024 at the same time as all of this, so it puts additional pressure because of this, situation. Here we have, looking at, this is Goldman Sachs information, geopolitical impediments to OPEC's ability or desire to deploy spare capacity pose upside price risk. Okay. And they were just talking about the Strait of Hormuz in there in the first one, just looking at the different events, potential impact of it. And yeah, we could have an additional $15 a barrel should the Strait of Hormuz close down for that period. I don't know if that's going to be the case. They said, we're done our actions, we got them back, we're not going to do any more. But of course, there will be a retaliation. And as a result of that, of course, they're going to want to go back the other way again, and back and forth and back and forth. So we'll see where that ends up. But just understand that there's many different things that could unravel at this point. And these are a few issues, just a few. All right. You've got this. The cost of insuring against oil price spikes has increased on rising geopolitical tensions. And so there's a lot of these things. To you, the individual, of course, it doesn't necessarily matter. You're not going to be buying options on the risk here. But what does it tell us? That traders believe that there could be much higher prices coming, assuming that we get more and more. I think at least a bump up. If this continues, there's worry, there's concern. And even if, nothing necessarily happens right now, what do we have? We have this wait and see. Yeah, prices could be bumped up. This is a couple of charts. In fact, I'll zoom in just to show you quick. You can see the rig count in the United States, again, edging down. So if you look at the chart on the right-hand side, U.S. oil rig count has continued to decline from that peak that we had in 2023. The production is up. There's no question about that. But total rig count down. We need more if we expect to have lower prices longer term, right? And then we have this, just looking at crude oil production growth, edge down again this week, and Permian being one that is significant. That's the dark blue right there. You could see definitely where a lot of that oil is coming from. So if the United States wants to offset what's going on, halfway around the world, well, then it needs that production. It needs more growth, and also delivering that to actually within domestic consumption. That's not all happening, that's for sure. They're selling that off. So of course there's a worry here. The price rise of oil is very clear and obvious, but we'll see what happens by the time the market opens. There's a lot going on, many moving parts, of course. And so I asked the question, what's next? What's happening? Like, what's behind all of this? We know that, and I show you this, and I talked about this in my first book. Who's leading the race to mine the deep sea? And so you got BRICS nations overwhelmingly that are mining the deep sea. They're looking for all kinds of things. What does this tell us, though? Like, why would they be going into the deep sea to find stuff if it was just readily available anywhere else, right? You wouldn't do that. Just like you wouldn't do fracking, just like you wouldn't go into the middle of the Gulf of Mexico to try and get oil if you could simply knock on the floor and have that oil flow in. You know that it is becoming more difficult, or at the very least, the easy oil has been found. And we know that they have to come up with new technologies like they did with fracking, to be able to pull that out efficiently, because it's not just can we get it out of the ground, it's at what price. At what price? And so some companies might be profitable at $40 a barrel. Some companies might be profitable only at $80 a barrel. In fact, a lot of the fracking, a lot of shale is actually only profitable at like $80 a barrel. Some companies have more of an advantage. Occidental Petroleum reportedly is better off in that case. Okay, so watch what happens with oil. There are oil companies. There are oil ETFs. And what I would say is the ETFs, short-term only. Short-term only. That is extremely important, because you're like, hey, I'm holding this oil. I'm trying to invest in oil, but you're actually investing in a derivative. So you're not really investing in oil. So be mindful of that. If you're going to go into something, it's in, it's out. And do that, when you think the trade is done, or the bulk of that trade is done. Just call it quits, take your profit, and move on out. That's what I would say about this. At the same time, other commodities, other things could be attractive as well, because there's tension, right? So you could see that happening. If they do believe, though, that we're going to head into some major deflation and all that, then it could be a different story. But if it's just action between two sides, that of course could create a more pronounced effect on the price of oil. Could go much higher. And when it comes to resources in general, I just want to make this clear once again. The AI revolution has a problem: energy. So we have this growth in AI would require an expansion of gas generation capacity. On one hand, AI promises to help advance the transition. On the other, it's clearly hindering the progress of that transition by posing an energy demand question that only hydrocarbons can answer. All right. And so, they want nuclear. Absolutely. A lot of energy produced by nuclear, but it cannot be done. If you want it today, it takes 5 years. It takes 10 years to build these facilities. In the meantime, natural gas could be the one that provides a lot of that. So it could mean higher prices, of course, if the supply and the demand fundamentals are off. So that's what's going on with energy overall. Keep an eye on that. There are companies that are going to do very well, at least for a period of time. Maybe we could say, yeah, they're all going to be nuclear later, like who knows? But in this gap, in the meantime, there's some interesting developments that are going on. Okay, so I'm trying to tiptoe, as you can see, but I hope you do appreciate this video. Hopefully what's going on at this time will calm down, it'll cool down, it does not escalate. But at least for the time being, this is a huge concern for everybody. You know, I don't see a reason why this would benefit anybody, but here we are. If you want to know the financial education that you just can't get anywhere for free, it's totally available to you. I made this for you. Literally, I created this thing, created this whole website, set up the website, took hours and hours and hours and hours to figure all this stuff out, and then I gave it away for free. It's called Compass. There's no email, there's no paywall, there's not even a link on there to, hey, go watch my YouTube videos. None of that. No thumbs up, no nothing. Why did I do that? I did that for you. Compass. themoneygps.com/compass. Or you just go to themoneygps.com. You click on that link for Compass. It's like 20 minutes worth of these little tiny video clips that explain the financial system, how it works. Super simple stuff. And you could share that with other people who, they want some financial education. I don't talk about the Federal Reserve. I don't talk about the ins and outs. Totally for free. Check it out. All right. I want to see you back here tomorrow. We got some good stuff planned. We're talking about debt. We're talking about what's happening with the average person. I'll see you then. Take care.